as traders, we talk a lot about volume, but what about volume profile? Let's take a look. Okay, what we have here is the NQH contract. So this is for March of 2021. We're looking at a 10-minute chart. Now on this chart, we have volume down here at the bottom, and on the left we have volume profile. Think of it as profile, it's going from the side, like a picture of a person from the side, their side profile. So what are the differences? Volume here tracks the number of contracts traded for this particular time frame, and in this case we're using a 10-minute chart, where volume profile tracks the number of contracts, or the amount of contracts traded at a particular price level. So we can see here we have a lot of contracts traded at this level, and we have a lot of contracts traded at this level. This level right here with this yellow line, it's called the point of control, or the POC. And this is the level where the most contracts were traded to that point in time. So when the market opened right here in this area, this level didn't exist yet, so the point of control would have been somewhere in this area, which we can take a look at in a minute. Something I wanted to point out on volume as to why I put a little more stock, no pun intended, into volume profile versus volume candles. And let's take a look at this one right here. Here's a large red volume candle, and as you can see, it's pretty significant. There's only one or two that are higher right here. The next candle is about half the size, but it doesn't correlate directly to the price candles. So we have a large amount of volume in a large candle, and then we have half the volume, but the candle isn't half the size. It's only about a third of the size, or maybe a quarter of the size. And then we look at the next one. This green candle is significantly lower and smaller than these, so there's not much volume at all. But this candle is actually a little bit bigger than the one before it. And this is important to note, because you can have massive amount of volume with a very small price movement, and on the other side you can have a very small volume candle with a large amount of price movement. So it can get kind of tricky, and this is why I like the volume profile, because if you think about it, as traders, we are not trading the amount of volume. So if we put it on a position, whether the volume is small or whether the volume is massive, if the price doesn't move, our position doesn't go anywhere. We don't go up or down or make money or lose money, right? Nothing happens to our position. Volume profile is what we tend to look at, what we need to look at, because we're playing the price value, not the price volume. So how do we use it? First of all, there's a couple more components to it here. This gray area is called the value area, and the colors don't mean anything. I just changed them. They're different for each system. Use the default ones or make them whatever you want. But the 70% is very common amongst a whole bunch of different charting platforms, and I've posted in groups, in Facebook groups, and in other chat rooms to find out what other programs are using. And it looks like they're all using 70. I think I saw a 68% or maybe a 72%. But that is the value area, and that's important. If it's the same, if it's standard across multiple platforms, it's going to be used a lot by traders. And this is something that we can take note of. For example, let's look at the day before. Just out of curiosity here, let's put a line at the value area high and at the value area low. So once this day closes, this happened to be Thursday, what we look for on the next day is we see if when the market opens, does it shoot up above the value area, or if it opened down here, did it below? And as you can see, this stayed right within the same range as this day here of this value area. So this Thursday and Friday, 2 range days. I'm going to back up just a little bit more because I want to take a look and show you something here. This is the Wednesday. This was our the United States presidential inauguration. So let's see what happens here. If I put a a line here at the top, the high and the low of the value area. Remember, this day closed, and I'm marking off where my value area is. We can see that the next day we opened over the value area high, and that became a support area, and then it just took off from there. So that is something that we can use. All right, regarding volume profile, let's take one that's gives a little bit better example. This one here. Okay, on this day, notice we have different levels. So we have a peak here, and this drops in, another peak, and it drops in like this. And there's a couple peak and drop right here. These are called value area low. Okay, excuse me, low volume area. So once price breaks off of one of these peaks, you'll notice that it will move pretty quickly through these low volume areas. And why is that? Because there weren't a lot of orders here to begin with. There's not a lot of sitting orders. They got filled and it passed right through. And you will notice that. And you can take that into consideration for the next days. Here's a peak from this day right here. It staggered around it, and it never broke through. We can use this as potential areas of orders. So we have a high peak and another peak right there. And as we can see, when price passed through these areas, it went quickly. There was no bouncing around like there were on these areas here where we have higher volume at these levels. That's something else to take into consideration. The final thing is, as the day is going on, this point of control is being built, price will tend to go back to that point of control area. If I show you what I'm looking at, what I'm talking about here, I'm going to back this up to here. So we can see this is the point of control at this point in time. Now let's just go and mark this off. Okay, but as the day goes on, we can see another peak going here as the market is going further and further. We're getting more and more orders. It's going to create more and more levels. So I'm going to move this forward. We can see that the point of control has already jumped down to this level right here, and we're starting to see a low volume area. So I would venture to say that if price breaks away from the point of control and goes up, it'll pass quickly through this low volume area and go back up to this level where it was before. And this is where the point of control started, so we want to keep an eye on that area. Now let's see what happens if we just go forward quickly. All right, the point of control jumped down to this area. This is where a level that more volume is being traded at, more contracts are being traded at. So this means something. I would expect this at some point to come back up and close this area like this here. Okay, this is what we're expecting from peak to peak, and then back up to where the volume profile started from the market open. So we'll see how long it takes to get through there. We're almost at the London session market open right now. We're going to keep going forward. We'll see if this volume profile builds differently, if it drops down, if the point of control drops down, or whether it's just going to go right through this low volume area and back up to where it started. Now, as we're going to get into the US session, so we're going to have a lot of larger candles, a lot of movement. And there, the point of control just dropped down here, and it only took 15 minutes or 20 minutes into the US session to pull it right back up again. So we can see this consolidation, and as soon as it came up to this level, it broke through this low volume area we had plotted out before, and it went right up to where the point of control started. These are significant. These are things to look at, take into consideration. Here is the value area from the day before. So once it came down, if you recall just a minute ago, once this fell down to here at the point of control, it bounced around this area a bit, before it rocketed back up through the low volume area and back up to cover this zone. One last thing I want to go through in this video, let me bring back to the main, so we can see the entire day here. Futures, as I've mentioned in other videos, has 3 distinct sessions: the Asian session, the London session, and the New York session. And we can use this volume profile on these sessions to try to get a better idea of what the market is doing or what it is going to do. So I'm going to turn off, I don't need the volume on anymore, and let me turn off volume profile. I just made this little indicator here that just shades the background for me. It makes it easier to see the sessions. So we're going to take a little tool, and I'm going to plot off, let's say you're coming to the market in the London time frame. Asian is done, so I'm going to plot the Asian area session out, and we can see what do we have. We have a value area right here, and a value area to here. This is that 70% range, and we have a low volume area right here. So we would say if the price comes up to this level, breaks through the value area high, it'll probably go quickly through this zone right here. You can see it did that during the US session, but we're looking at it into London. Once it broke down below and stayed below the value area low, it stayed down there the entire day, through the entire session. So let's look at the London session now, and let's see if there's anything that stands out here. We're going to plot from the beginning to the end of the London session, which is this. And here is the volume profile. So this is interesting because this would tell me that prices, it started here and it consolidated here around this point of control with the potential of going down even further. This is where we'd use other things like Fibonacci's or some type of oscillation to get the Elliott wave theory potentially to get the direction and where price may be heading based on cycles. So let's plot off the value area for the London market like this. Here's a 70% area, and as we can see, once it broke the US market, it broke out. It just took a run for it. It broke through both of these levels, bounced off, and stayed above the entire day. So that's the point I wanted to make with these volume profiles. Is we have the one for the entire day that we can turn back on and see, and we can plot these out. If we go back, let me do one more thing here and plot the entire week. So we have all 5 days of last week. Let's put this on auto. There's Friday, Thursday, Wednesday, Tuesday, and Monday. So what happens if we plot the volume profile for the entire week across these 5 days? Where is our point of control? It is here. Okay? Right here. So this is, and it kind of makes sense, the last 2 days had a lot of consolidation right along that same area. So this is pretty good. Now if we plot off the high like this and the low of the value area of this entire time frame, this is looking pretty good. We'll check out how this it is bouncing off of this area for all week long. That's a pretty good indication that we have some resistance points. Whether we go higher or not, we can play these breakouts or we can play the reversal off of it. Something to take a look at. We have some low volume areas here. Once it breaks off this peak down to this peak, so if I expand this out, this is the area I'm looking at. So I would look for anything coming through onto the next day. So as an example, this is some things to take a look at. So if price breaks down into this area, dips through, it will probably, not always, but possibly come through these low volume areas. You can take a position on that. Something to keep a look at. If you're not used to volume profile, take a look at your provider, see if they have it. I'm sure they have it. Most of them do. Play around with it. Let us know what you think in the comments below. Catch you on the next one.